Morning, everybody. It's the 23rd of April. I'm Joe Neighbour from Signal Centre, talking ball all by myself this morning. Still no wingman. Steve's off until next week. Hopefully, he's having a nice, relaxing break. You're stuck with me today. Happy St George's Day for those that are watching from the UK. Going to get stuck straight into it in terms of headlines and what's moving the markets this morning, and then run into some charts. First up, big news last night. US President Joe Biden will propose almost doubling the capital gains tax rate for wealthy individuals to 39.6%. That is to help pay for the raft of social spending. That's according to people familiar with the proposal that was leaked last night. Obviously, he's focusing on trying to equalise the capital gains and income tax rates for the wealthy individuals, saying it's unfair that many of them pay lower rates than the middle class workers. So we did see a little bit of a bump in the equity markets yesterday as a result of that. And more so, we've actually seen in things like Bitcoin today, which has become the go-to risk asset, I suppose, for people in the market. A lot of participation, obviously, from people that have done quite well for themselves and have free cash to spend. So Bitcoin is getting a bit of a walloping today, and I'll come on to the charts shortly. Over to the coronavirus situation. Germany is looking to lift its age bracket system to make COVID shots available to all adults from the end of May. That's according to a Bild report yesterday. Just as the state premier said, the country would buy 30 million of the Russian Sputnik V shots. So hopefully we're going to see Germany catch up on the vaccine program and get their way out of the situation that they're in currently. In terms of what's going on the corporate front, we've seen a win streak for German car makers in recent weeks, and that seems to be continuing. Obviously, we're seeing the likes of Daimler, Mercedes-Benz, amongst many other car makers as well, all sort of enter the race on the electric vehicle market, and obviously looking to rival Tesla. So it seems to all be hotting up there, and no signs of that slowing. In terms of elsewhere, luxury stocks from Salvatore Ferragamo to Burberry and Richemont and Moncler all look to be active this morning because LVMH, Louis Vuitton, Moet Hennessy, boosted its stake in an Italian shoemaker, Tod's, to 10%, and a move that's likely to fuel speculation on more merger and acquisition activity. So keep an eye on that sector if that's something that you follow. So let's get into the charts then. And first up, I'm going to start with Bitcoin today. Let me just share my screen. And starting with the daily chart. So, there'll be no surprise to people who've been following Bitcoin what the chart's done. It's been a spectacular rally from the March lows that we saw last year. But there is some signs that we're starting to see some top patterns potentially emerging here. When you get sort of a rounded formation, that can be a little bit of a clue that things are starting to reverse. And obviously, it is due a little bit of a correction. It hasn't had many at all in recent months. So we need to keep a close watch on that. And as you can see, we have seen a bit of a pickup in the volume as well. But today it's down by 7.25% or 7.5% now. So I would imagine that is being driven by this news around tax cuts, as people, potentially concerned about what that will do for the market. So quite interesting that we've broken below this low here from the 25th of March this year. That would have been a line in the sand or a support level that would have been well watched. And we're seeing quite a significant breakdown of that level at the moment. In order to confirm that, I would like to see it close below this level on the daily chart. So obviously we've got a few hours to try and see if we can push that back above this level. But it's not looking great at the moment. But as we know with Bitcoin, we can see these massive moves, so it would also be no surprise if we did see it close back above those levels. And the dip buyers took advantage of the sale on Bitcoin today, so keep an eye on that. Potentially what we do have here from a technical perspective, if we do close below this level, is worth noting that we could be forming potentially a double top pattern. So what that would mean is that we would be breaking the neckline here, and in terms of where that would project price to go to, I'd be looking at something along the lines of this, to the downside move down to 35,800 potentially. So we could see a reasonable shakeout here if this double top pattern does indeed play out, maybe 25% below the current price or from the break line that we've seen today. And ultimately, that would just be a normal correction, I think, within the grand scheme of things. I know anything over a 20% move is considered a bear market, but this thing does need a bit of a cooling off phase, I think, before we can consolidate some gains and hopefully see it continue to move to the upside. Now, over to equities. It wasn't really that widely felt. I mean, although there was a big points move in things like the Dow Jones yesterday, there wasn't anything massive to be too worried about, I think, with the stocks. This is the Nasdaq index, so we did see a bit of a red candle yesterday, but it wasn't an engulfing candle. We didn't engulf the previous day's session, so we're pretty flat today. So it seems as though any bad news at the moment is not really impacting the US stock market, more so maybe riskier assets such as Bitcoin, obviously, as we're seeing at the moment. If we look at the S&P 500, it's a similar story. The trend continues to be very strong, but as I mentioned yesterday, there is quite some distance between where we're trading at the moment and down to this lower support line down here. So from a risk reward perspective, I'm not massively encouraged about buying that at this moment in time, because in order to push through to new highs is going to take a lot more effort, I think, than maybe a corrective move down to here somewhere. So from a risk reward perspective, there's not a market that I'm overly interested in at the moment, but obviously cannot deny the fact that it is in a very long-term and strong uptrend. So if you're a longer-term investor, I can't see any reason why you'd want to get completely out of the market, because overall it looks very strong. But it may be a consideration to maybe trim some profits if you've got any, which I'm sure you have, because clearly the trend has been super strong for a number of months. Over to the European markets. Again, not much impact yesterday from the Biden announcement regarding taxes. The DAX continues to hold support here at 15,150. Talked about potentially a breakdown to the trend line, but that hasn't materialized, and we are moving higher today by almost a third of 1%. So looking pretty strong on that front at the moment. FTSE 100 is up nearly 0.5% today. Small bit of weakness yesterday, but nothing to be overly concerned about, and we continue to hold this trend line. So while that remains the case, there is the potential for a probing of these highs that we saw back on the 19th of April. If we do break below this 68.50 level, then that may lead to a corrective move, but there's no immediate danger of that at the moment. Over to the oil market. As I mentioned yesterday, we were watching this big channel which was broken, and now we've seen a retest. We are sort of mid-range at the minute of where I think price could potentially go. I've drawn this blue line on here to signify a potential top pattern that's forming. It's only a potential pattern at the moment. In order to confirm that, I'd like to see a break below the lower end of this range at 57.28. So for now, I'm expecting more choppy price action on oil and limited trading opportunities in the short term, to be totally honest, while we remain within this range. If you are looking to play oil, then I think it would be a case of trying to play the range, selling at the upper ends, buying at the lower ends. But as with most ranges, you do get choppy price action, so expect it to be difficult conditions. On gold, still looking pretty good on that front, although we did see a little bit of a pullback yesterday, as you can see there with that red candle, and we're following it up a little bit today with a bit more weakness. But we've got this double bottom in place here, signified by these two arrows, and the break up above the neckline here. So we are projecting higher prices up to around this kind of level, which is 1836. So I think any dips down to this neckline here would just simply be another opportunity to onboard on gold in anticipation of a move higher. So remaining bullish on that for now. If we look at some of the currencies, let's first up look at dollar index. Looked pretty good yesterday. At one point we did engulf the previous day's price action with a bullish engulfing candle, but we're giving it all back today. Further signs of chop in that market, meaning that it's quite difficult to trade for now. And in terms of direction, while we remain within this narrow channel, I think we can expect lower prices, and we could head down to this upward trend line down here, which may attract some buying interest and continue this small sequence of higher lows. So for now, still looking quite bearish on the dollar index. Unless we can break above this channel, then we may see a continuation higher up to trend resistance around here somewhere, which is about 92.50, 92.60. If we look at euro dollar, that will be the flip side of what we're seeing on dollar index. So yesterday some weakness, but we're pushing up today, trying to get above this resistance at 20.43. If we can get above that on a closing basis, then that may open up some more upside in the short term. Keeping an eye on this channel here, because if it does break down, then it may lead to or trigger a corrective move to the downside. But all in all, the short-term momentum is clearly quite bullish in euro dollar, so maybe a case of just buying dips in the very short term. Finally, going to take a look at cable. Not really a lot happening here. In sort of two minds as to where I think this could go. So obviously we've got this bullish channel which broke here on the 23rd of May. And we retested it on a number of occasions, and it's been rejected on the underside of this broken channel. But also what we have here with the blue lines is a wedge which broke out here on the 20th of April. So are we seeing a retest of this before a continuation higher? Or are we just going to range trade between these ranges I've got here at 136.70 to 140.00? So more chop expected on that one. I don't see any real clear opportunities on that market today. On to the gun to the head trade from yesterday. So just made a call live on the video where I expected to make a few quid. I went long of euro dollar, trying to play this range, this channel that we're trading in at the moment, and unfortunately was a little bit too aggressive with my stop, so I was stopped out on that. As you can see there with the trade parameters, so I was a buyer on the open yesterday, or sorry, around this time yesterday, got stopped out, but it's moving higher within this channel today. So that's the way the game goes. Very annoying, but what can you do? So today I'm going to have a look at Nasdaq. Now, obviously, bear in mind this is a short-term trade. We only give these until 9 o'clock tonight, but it seems as though the US markets have shrugged off this news of Biden increasing taxes. Price action has been pretty choppy. And the ranges are starting to increase a little bit, but I'm going to try a speculative long on Nasdaq because overall the trend is still very strong. There does appear to be a bit of a top forming here on the intraday charts, but just going by the last hour's worth of price action, engulfing candle that we formed there in this sort of decent-ish kind of support that we seem to have formed at 13,725. I'm going to try and buy it here, targeting a move back up there. Stops below these lows that we've posted, so if we do start to break down there, then I'd be looking to probably flip my interest to the short side in the short term, maybe looking to play a head and shoulders top. But you can't keep batting against this trend that we've got in place on the US stocks, so I'm going to try and target a move back up to these highs that we saw a few days ago at 14,050. Entering the market now at 13,790 with a stop loss at 13,704. So that's my trade of the day for today. So what's going to move these markets? So today we've got the Bank of Russia. They held their rates, or they've got their rate decision today, and also we've got UK reporting retail sales. Economists are expecting a slowdown in March. Those numbers are already out. I haven't seen an update yet. Probably should have been across that, but it's been pretty busy. In terms of corporate news, obviously we're very much in and amongst earnings season at the moment. So we've got Daimler, which has already come out. We've got Remy Contro. We've got Lafarge Holcim. And in the US, we've got Honeywell and American Express, which is a bit of a quieter day as the weekend approaches, and we'll be back on full steam ahead with earnings in the US next week. In terms of macroeconomic data, later today we have US manufacturing PMI at 245. We have new home sales at 3 o'clock. And we have ECB President Christine Lagarde speaking at 3:30. So that will take you into the weekend. Steve will be back with me on Monday to go through some charts and update on what's happened over the weekend with regards to markets. In the meantime, trade safe, and I'll be back next week. Have a great weekend, everybody. Cheers. Bye-bye.